Much of this season at the Debate Circle shall be tackling matters financial inclusion, financial literacy, and especially among young people. At the heart of this motion is this same concept, and the motion reads, microfinance institutions in Kenya are more effective than traditional banks in promoting financial inclusion among the youth. I read the motion again. Microfinance institutions in Kenya are more effective than traditional banks in promoting financial inclusion among the youth. All the best to both teams, and we have Moi Forces Academy versus Mang'u High School.
Microfinance institutions in Kenya are more effective than traditional banks in promoting financial inclusion. My name is Joshua Mwendwa from Moi Forces Academy, here to strongly propose to this motion. Now, on to my role as the first speaker, I'll define for you the terms. Microfinance institutions. Microfinance institutions are financial companies that provide banking services, emphasis to low-income individuals or groups who do not have access to banking facilities or services. Traditional banks are banks with physical presence and offering conventional banking services. Financial inclusion is the availability and equality, emphasis on availability and equality of opportunities to access financial services. Youth are people between the age brackets of 18 and 35. We as side proposition are here to say that microfinance institutions will provide financial inclusion for the youth. Well, why do we say this? We say this because they provide financial opportunities to those with low socioeconomic backgrounds. They help provide financial services to those in remote regions where traditional financial institutions do not have operations, and they encourage entrepreneurial activities and business development in poverty-stricken areas. Considering that we are aiming at including the youth, majority of whom are not employed, majority of whom have to depend on their parents for things as much as rent, for things as much as food, etc., etc. Now, according to an article by the Daily Nation, 38% of Kenyans cannot access banking at all, and only 19% being formally banked. Nairobi has the highest number of bank branches considering they are traditional banks, with 194 out of 443 being here in Nairobi. That means that we have not even counted those in Mombasa, those in Kisumu, forgetting people who are in Mandera. And considering we are talking about financial inclusion, we cannot include these people with our traditional banks being focused in Nairobi, in Mombasa, and these urban areas, forgetting those in the rural areas. Now, as a result, banks are reluctant to lend to small and medium enterprises and low-income households due to lack of credit history, no usable collateral, and high cost of trading. As a result, there was need to develop innovative, tailor-made financial products and services for the youth. How do we achieve this? We achieve this through microfinancial institutions. Now, we come at you with a framework. One, target group identification. Microfinancial institutions will identify the youth who require their services. They will not just go giving them helter-skelter to any person. They will identify who really needs it to include them in finance. Two, application and evaluation. Once identified, the borrowers will apply for the loans, and they will be evaluated and checked whether they qualify to get it, and they will focus on character, business plan, and willingness to repay. Considering the youth are not employed, they will have a business plan to offer to these microfinancial institutions to get the loan. Three, loan approval, disbursement, and assessment. Once we approve of your loan, we'll give you the money, and then we'll follow up on how you'll use this money. This means there will be no misappropriation of the money we give to you, considering we are aiming at including the youth who are known to misappropriate funds on impulse. We will follow up on what you do with that money. Four, repayment. Microfinancial institutions will utilize group lending models to create collective responsibility for repayment, fostering peer support and accountability. This will reduce the chances of defaulting. That has been my time. My other speakers will continue. Thank you.
Microfinance institutions in Kenya are more effective than traditional banks in promoting financial inclusion among the youth. My name is Peter Mbatia from the Mang'u High School, and I am here to strongly oppose the motion. Now, let me begin by saying that all that they've said is completely bogus. And that means that I'm now burdened to repeat the complete meaning of whatever they've said. So, actually, if ignorance and misunderstanding of the motion was a virtue, trust me, they'd be my patron saints. So, what is financial inclusion? Financial inclusion is the availability and the equity of financial opportunities to access financial services for both individuals and corporations. While what is the meaning of the term effective? Now that was something very key that they failed to actually outline. It is a success in producing a desired and intended result. Now what is the intended result in our motion today? The intended result is financial inclusion, to which their side of the house actually fails to bring about what we call effectiveness. Now for you to be effective, that means you have to be widespread. You already have to have taken root in the country. You already have to have taken root amongst your people, so that you can gain the influence. Now, I want you to look at this. Statistics from Business Insider states that 1,475 traditional banks have branches all across the country, while there are only 55 branches for microfinance institutions. How on earth do you expect to be effective in bringing about financial inclusion if you are not yet widespread in the nation? Something else. Now, on to my first point. I want to talk about this. Microfinance institutions are not well developed in terms of infrastructure. Look at this. According to Business Insider again, we've heard that 4 out of the 14 only operating microfinance institutions in Kenya are actually going bankrupt. And you know why? Because their policies and their frameworks are not developed enough. Look at traditional banks. What do? Traditional banks already have a set in place system that actually looks into the client's perspective and into the bank's perspective to promote the best. How do they do this? They look at your financial history. They look at your records. This means that whenever they're going to help you financially, in terms of financial security, they actually are going to ensure that for the both of you, it's going to be quite well. Now, these people are actually trying to tell us of effectiveness. I have a question. If you were to replace traditional banks with microfinance institutions, how long will it take compared to what we've just said? That there are only 1,475 traditional banks already operating, while there are only 55 microfinance institutions actually working out. So that is why, again, I completely disagree with them and say, the case is over. Thank you.
Microfinance institutions in Kenya are more effective than traditional banks in promoting financial inclusion among the youth. Allow me to fall to the case they've started with. The first speaker came here and told them they need to have a system that is rooted into the people. And he claimed the system is traditional banks. Now the question I pose to them is, if it is so rooted into the system, then how are we struggling with the aspect of financial inclusion in the first place? If it's as effective as you claim it is, then we wouldn't be having this debate. There wouldn't be need for the forum. Meaning it's incapable. Why? Traditional banks, for you to get services for traditional banks, in order to get financial inclusion, you have to have a bank account. And people, many being the youth, fail to have these bank accounts. Why? Because traditional banks have lack of proper identification, poor credit history, low income, and geographical barriers. Now, financial inclusion is supposed to come in and fill in this void to allow the youth to get financial inclusivity. Financial inclusivity, looking at it with the following principles: sustainability, affordability, use, quality, and simplicity. How does financial inclusion go about to achieve this? The first speaker began by prepping on of a framework. To add on to that framework, we have number 1, financial education, where these microfinance institutions provide financial literacy that make the users more aware and more informed to make their financial decisions, where they will be taught on budgeting, saving, and responsible borrowing. Promoting financial literacy, which is the main thematic concern of why we are holding the debate here. Number 2, the accessibility concerns. After you have been taught, there is the part where you begin to access the money. In microfinance institutions, there are less stringent measures. It only looks at, number 1, your business plan, number 2, your willingness to play, and number 3, your character. As opposed to traditional banks, which have a long process and vast documentation required. An example being by KCB Bank. In their website, a requirement for you to get a bank account are 2 latest passport size, 2 latest passports, original and photocopy of a national ID, a letter of employment and utility, reference from either the reputable employer or a holder of a KCB account. Now, taking into account these are the youth, many of who are unemployed, they don't have such. This limits them. This is limiting an innovative person somewhere in the slums who has a brilliant idea but has not had a silver platter or a spoon to go with that has given him a job experience. Now with microfinance, with these less stringent measures, we are able to view his plan, look at his character, and give him the funds he needs. And further going on into this, with the simplified loan process, less stringent terms, fewer documentation, and faster approval, this is helping inculcate a culture among the youth, leading to entrepreneurship. An entrepreneurial culture which will go around unemployment which is being faced by the Kenyan youth. The entrepreneurial culture which will help the youth become more innovative, which will help the youth financially sustain themselves, achieving financial inclusion in the aspect we've stated above. Sustainability in the fact that they will be educated, meaning it will be a culture that they will continue going on forward with. Affordability, in which it gives affordable rates for them to pay back interest. Quality, the services of which are monitored, and the simplicity part of which where we require less documentation. Wayne Dacia, that has been my time. Thank you.
Good evening, ladies and gentlemen. I am Albert Luthuli from Mang'u High School, and my time begins in 3, 2, and 1. I will start with my rebuttals. Your first proposer says that traditional banks are mostly centered in urban areas and your microfinance institutions are centered all over the country. This is not possible. Why is this? According to the Business Insider, there are more than 1,400 bank branches in the country and only 55 microfinance institution branches in the country. That is not possible. What am I trying to say? Our banks are more widespread than yours, hence promote more financial inclusion. And on to my second rebuttal, your second proposer tells us that banks have very strict measures put in place for you to take as a loan, for example. Your microfinance institutions have relatively easier ways to acquire these loans, for example. That is where you as microfinance institution supporters fail. 47% of small businesses are very likely to fail according to standard media. And if they fail, this bank will not be able, for example, to get the loan paid back to them. And as we had earlier said, 4 out of 14 of these microfinance institutions are running bankrupt. We as banks, we will not like to take that risk and become bankrupt therefrom. On to my first point. 87.3% of the Kenyan youth have access to formal financial literacy. That means we've achieved 83.7% financial inclusion in our country. That's according to the Central Bank of Kenya. This number has greatly increased from a staggering 26.7% in 2006. Who helped us achieve this? Our traditional banks. Our traditional banks have been working for a very long time trying to help us reach this place. This point in time where we have 83% of youth having access to financial literacy. What am I trying to say basically? Our traditional banks, they have already done the task. They are up to the task. We have already, the motion, according to my research, that's what it says. They have already promoted financial inclusion in our country. So why not let them continue with their good work? On to my second point. Our goal here, both proposition and opposition, is to look for systems to help us promote financial inclusion for our youth. Financial institutions, for your information, ladies and gentlemen, offer a very wide range of services, ranging from digital banking, credit and debit card services, mortgages, and so on and so forth. Microfinance institutions, on the other hand, have but only they offer but only small loans and basic saving accounts. What am I trying to say? We as banks offer a very wide range of services compared to our microfinance institutions. We do not want to limit our youth to these small services offered by these MFIs. Traditional banks have more and better services. And as I conclude, I like to say that in the dynamic landscape of financial inclusion, microfinance institutions and traditional banks both play a role. For the longest time and with the greatest effect, our traditional banks have done a great job of promoting financial inclusion. Thank you.
At this point, I feel like side opposition don't even know what they are talking about, because they come and bring on something about diversity and claim that they have many more branches as compared to us. While, if you look at the Kenya Women Microfinance Institution, which has 229 branches, that is only one financial institution, one microfinancial institution. It has 229 branches countrywide. You claim that 47% of small businesses are bound to fail, and you as banks are not likely to take that risk. And then you later claim that you have provided financial inclusions and that we should just allow you to continue with that. Since of this 47% of small businesses are bound to fail, then you people are not likely to engage them. You are not likely to give them the loans that they need. And this is why we are bringing in microfinancial institutions to fill in that gap, as has been stated by our second speaker. You see, the aim of microfinancial institution is to provide fundings for micro, small, and medium enterprises, and this is beneficial for people who do not have access to bank accounts, or those who do not have the collateral to actually get access to these bank accounts. We have also highlighted that these people we are mainly focusing on are the youth, and according to innovationentrepreneurship.springer.open.com, MFIs offer both financial and non-financial services, which include insurance products and other financial services which help clients to build their assets. So we are not like just giving you money helter-skelter, as it has been stated by our first speaker. These services are not provided by traditional banking and financial institutions to a certain specific people who lack proper identification, who have poor credit history, and they have low income. I'd like us to look at low income, and since we are majorly focusing on the youth, these people are people who are depending on their families, on their parents, as it has also been stated. So according to World Bank, nearly 1 million young people will enter the job market in Kenya next year, and yet only 5% of people who are ranged from the age of 15 to 25 years are actually absorbed into the formal job market, which leads the rest, the 95%, to accept the informal, making informal the new formal. And the informal jobs, now this is what brings in the aspect of low income. How do we fix this? We have provided you a framework. The framework was target group identification. These are people who are in the low income bracket, which these traditional banks are not willing to give them fundings because they lack collateral. We have application and evaluation. We have loan approval and disbursement, repayment, financial education. We have shown you by this, there is accessibility. The MFIs offer, they have lower requirements for you to actually get this. We have tailored products, financial education, and community engagement. On our sector of tailored products, it is such that we will come and we will evaluate your small business that you're planning to start. Since they claim that 47% of these businesses are likely not to succeed, we will evaluate, we will educate you on how to actually run that business, and we will see the value of that business so that in the long run, we can give you a rate that is appropriate to the business which you are setting up. So it will be financially inclusive for everyone, even that person who has a low income. We have given you the principles of financial inclusions, which include sustainability, affordability, use, quality, diversification and innovation, and simplicity. And microfinancial institutions are covering every single aspect of this, and they have claimed that they are not willing to take that risk, while microfinancial institutions are willing to take that risk and teach you how to manage that risk. So with that, I rest my case.
Now, Kenya recently moved from a third world country to a middle income country. Why is that? Because we have this traditional banking system. Do not fix what is not yet broken, or you'll come to ruin. Now, I'll begin with my rebuts. First of all, they say that you provide financial opportunities. How do you provide financial opportunities to the entirety of Kenya if you cannot even access the entirety of Kenya? They talk about 200 branches in the KWFT. Well, that's a lie, because according to the Financial Sector Stability Report of 2023, the KWFT only has 39 branches, one of them including Kakamega, Nairobi, Kisumu. You can Google it after the debate is done. Now, what else are they saying? They're saying our forum is ineffective. They're saying that they come to cater for the low-income people. 87% of the youth have access to banking services, which leaves only a 13% margin. They cover for the 13% margin that we have not yet covered for. Repeat, I said yet. Why do I say yet? Because we provide personalized outreach. We go to the places that need this help and actually teach them how to spend their money, use their money, and grow their money. I have an example. I had a lesson a couple of days ago at our school amphitheater, where one of the parents of our students, who is the chairman of, Cooperative Bank, I think, came and told us on how to spend money, use money. That is how we have financial inclusivity in schools through these traditional banking systems. Now, I'll go on to my main point. I'm done with the rebuttals. We have scopes and services. I'll repeat the motion because it seems that you didn't understand it even after he already repeated it. Financial inclusion, ability and equity of financial parties to access financial services for both individuals and corporations. We are accessing these services. How are you accessing services if you can't even provide services? Let me tell you one thing and one thing alone. They provide two main services. Number one, microloans. Number two, basic saving accounts. How many services do we offer? We offer a large range of these services beyond microloans, including saving accounts, credit cards, mortgages, investment programs, and insurance services. If that isn't financial inclusion, I don't know what is. Now, in conclusion, I'll finish up by saying, in the words of Jordan Belford, I have been a rich man and I have been a poor man, and I will choose rich every freaking time. I want to be rich. I want Kenya to grow as an economy. I choose the traditional banking system, which have not only moved Kenya from a third world country to a middle income country, but generated the lives of so many others. That is all.
For the final time today, I've been tasked with justifying our microfinance institutions, and they come and claim they have better services that are selected, and they have better services, better financial services to give, including loans and insurance and whatnot. But the thing is, you have better services for a selected group of people, better services for the rich, better services for those who have financial capabilities that do not encompass the youth, making it null and void. Another thing you say is that you are willing to go to the people and actually educate them, while a speaker of yours comes and say you are not willing to take the risk. You're not willing to come and incur that extra expense that microfinance is doing. So explain to me how you do so. And another thing, as our side, we have shown you how financial inclusivity is met on all spheres, beginning from the framework, beginning from its accessibility, beginning to how it has lower requirements. We have shown you how it goes around every single barrier found in traditional banks. How have you gone around the faulting, the detrimental parts of the traditional bank? How have you gone around the same issues that are currently facing these banks? Provide such, make it make sense, please. Thank you.
Now, I've come here to finally conclude the debate, so my time begins in 3, 2, 1. I'll advise you to listen to all statements said by team opposition. Now, you say, we talked about risk. We didn't say risk of going to this people. We talked about the risk of not getting paid back. Now, he talked about something called stringent measures. He said that they are willing to pay back. You might be willing to win this debate, but that doesn't mean you're going to win this debate. Keep taking that risk and you'll become bankrupt. That's the reason 4 out of 14 of you are going bankrupt. Now you said we should fix the flaws with our system. We have no flaws. We are currently improving day by day. We are reaching people that have not yet been reached. They reach 14%. We reach 86 or 87%. We have no flaws. We give you variation. We do what they do and we do more. They give microloans to small businesses. We do the same. But we guarantee that they will pay. We don't go bankrupt. We are a secure solution. Now today I was told one thing, that you can't prepare the future for the youth, but you can prepare the youth for the future. I would like to counter that. You can prepare the future for the youth by using this traditional banking system. Create a stable economy for Kenya by doing this thing, and include the youth who take up most of the people we have here. That is all.
Thank you very much. A round of applause, please, for both teams on stage. And we'll move straight to the judge's desk.
Thank you. Congratulations, my Forces Academy and Mang'u High School. You have dissected the question quite well. Let me go to the specific speakers. Joshua, you did a good definition of terms. You are composed on stage. You quoted your citations quite well. You gave enough points, but that ended up eating into your time. There was an issue with the time. We penalized you a bit for time. Wayne, proper cross-examination done, a very composed speaker, and you gave valid points. I love your composure. Diego, you also went ahead and did cross-examination quite well. I love your fluency, you are confident, and your points are also quite valid. Mang'u High School, Peter, you came and gave a different definition, which was also equally good, and that was good. Good rebuttals, passionate on stage. I love your work. Albert, you have also done rebuttals. I should say that all the speakers have done exactly what was expected of them.
Great debate from both teams. When you have 6 good debaters on the floor, we tend to start looking at even other small things, smaller things like what's your style and presentation? How do you communicate? Are you rigid? What are your gestures? Such kind of things, the teamwork, the coherency, and so many other things. The 6 of you understood the topic well. You brought in the points, and it was a good debate from both ends.